Welcome back to today's Retirees with Certified Financial Planner Wayne Maslick of Great Lakes Benefits and Wealth Management. Today we are playing the Mythbusters, and we are talking about myths about retirement. And Wayne, as we talked about the first one, that you'll spend less money in retirement, and for most folks that is not necessarily true. The second myth is also something that we want to talk about, and that is that your tax bill will be lower in retirement. Now, I would, again, this is a myth, but I thought that would probably be true.
Well, you'd think it would be true because you should be earning less money. I mean, that's the assumption, and it's not always the case, by the way. You don't necessarily want to lower your standard of living in retirement.
Sure.
What you hear a lot is, if you save into a 401k or an IRA and get the tax deduction, it's better to do that now while you're working because you're going to be in a higher tax bracket now compared to retirement. And that's not always the case for a couple different reasons. It's not only the bracket you look at, it's also the taxation on your Social Security income. That's a double taxation.
Wow.
If your income is low enough, and by low I don't mean poor low. I just mean if it's under what the government says that they want to see, you're going to not pay tax on your Social Security income.
Okay.
Once it gets to a certain level, like for instance a married couple filing jointly, it's about $33,000. They start taxing your Social Security.
Okay.
Then when it gets over about $44,000, they start taxing it more.
Wow.
So you can actually pay a double taxation.
Okay.
Where your Social Security income that doesn't get taxed, now because we have more income than what they want to see, you're going to start paying tax on this money. So not only do you have to worry about the income tax on your income, also the tax on your Social Security. So that's one thing. The other is, what I see a lot is people don't have other means to pull income. Like say they need 25 grand to buy a car. All they have, say, is their 401k or their IRAs or their other retirement plans. So if we pull money out to pay for that car, and it's money that's never been taxed, well, we may have to pull $35,000, so we net 25.
Sure.
So are we really paying 25 for the car, or are we paying 35? Where if we had other assets to pull from, such as money that's already been taxed, sitting in the bank, or just maybe just investments that aren't IRAs, they're just in a regular account, or other Roth IRAs, things like that, where we don't have to worry about bumping a tax bracket. We don't have to worry about having our Social Security tax because we have another pool of money that we can pull from. And that's what I help folks do is set up these different accounts, these different pools or buckets of money, I like to call them, so we have choices in retirement, so we don't get clobbered with taxes.
Sure.
We don't want just one resource to pull money from, and when we pull from it, it's taxed 100%.
Right.
We want to have choices and options to keep our tax liability low.
Right. And that's, as you have talked in months past in previous programs, that's one of the critical things that I see that people need to call you about, so that they can structure this that makes sense for what they're doing.
Yeah, and you have to do it, fairly early enough, so you have time to get that pot of money or bucket of money built up.
Sure.
There are other alternatives, which I won't get into on today's show, but you have to keep an eye on your taxes.
All right. Well, let's move on to myth number 3. And myth number 3 is that Medicare will cover all of your health care expenses. My neighbor, and I'll just, some people may know, but he was looking forward to reaching 65, so his Medicare would kick in and he would be taken care of.
Yeah. Well, I mean, and it's kind of true, but it kind of isn't. Medicare does cover a lot of your medical bills, and if you have a good Medicare supplement, really almost everything is covered. I mean, it is true. It's very rich plan. It's a very broad, covers a ton of stuff. But what people forget about is vision, dental, hearing aids.
Okay.
They're huge costs. And beginning of the show, we talked about the question of long-term care, right? And long-term care.
Okay.
So Medicare doesn't pay for that stuff. And it's amazing how expensive dental could be when you're doing caps and root canals and
oh, sure.
You're talking thousands and thousands of dollars, and you're on your own unless you have that type of insurance.
Well, let me ask you a question that goes along with this. Does it make sense to buy a like you hear those ads on TV all the time about Medicare covers this and we'll pay you $100 a day when you get sick? Does that make any sense?
No, I mean, there's you have the Aflac, right? Those commercials, and that's where that type of thing is geared. And sometimes it makes sense. It just depends. I don't not like those things. If you happen to have that type of a plan and you happen to get in a situation where you need it, they're wonderful.
Sure.
They have the cancer coverage and that type of thing. But again, that's family by family basis. But the general Medicare, yes, it covers a lot, but folks, don't forget about vision, dental, hearing aids. You got to plan for that. So you got to put that in your retirement budget. So when you leave your employer, we talked the first myth, right? There's 6 myths here. The first was you're going to spend less in retirement. Well, maybe your employer had all this covered for you. Now when you retire, you don't have dental or vision. Now you're on your own.
Right.
So there's an example of how costs could go up in retirement.
Sure, absolutely. Friends, all the more reason to pick up that phone, 866-626-3990. Give Wayne's office a call. Again, if it's on the weekend, please leave your name and number, and one of the ladies will call you back and schedule an appointment to sit down with Wayne. If you've been thinking about these things, now is the time. Don't put it off. We'll be back right after this.